Monday, sir.
Scott and Jamie. Yep. It's hot here. San Diego, when you don't have air conditioning, because you typically don't need it, but we're in that time of the year where everybody's in San Diego's got their windows open, moving slowly with no air conditioning.
Yeah, my buddies in Texas, I'm like complaining about the heat. They're like, well, how hot did it get? I'm like, it got to 80 today, and they laugh, and I'm like, no AC. That's the big difference. When you don't have any AC, 80 degrees is a little bit different. Anyway, not to carry on about the weather, even though it is beautiful once you get outside here in Southern California. But we've got another office hours for you. Today's July 10th. Wow. July's almost halfway over, and here we are. So welcome one and all to another edition of the office hours. I am your host, Jamie Hodge, and I've got Steve Gomez, as always, riding shotgun. So let's go ahead and take care of the legal stuff before we get into the fun stuff. Just want to make sure that everybody in attendance is aware of the fact that everything that we share with you here today and in all webinars is for educational purposes. If you do need investment advice, please seek that out from a registered individual, a licensed registered investment advisor, or a broker of some type. If you need investment advice, those are the guys to help you out there. Okay. Now, for those of you who are not yet subscribers, you will definitely want to pay attention to this slide here. It's our next test drive. It's going to be the week of the 17th. If you haven't already done so and you are not a subscriber, this is where you will definitely get the most bang for your buck, $8.88 for 5 full days of premium access, including the AI known as Holly. If you haven't done that already, sign up. And while we're on that topic, we just updated our data and made a nice little chart here. And so just look at the big orange arrow here. All right, this is when we launched AI, and this is what our subscriber base has done since we launched the artificial intelligence module. So up and away, and as we continue to enhance not only trade ideas as a whole, but a bunch of exciting new things coming up with the AI in the future, we should continue to see this humongous onboarding of new clients as the word continues to permeate the market. And for those of you who are new, maybe today's your first webinar. For those of you who attend on the regulars, bear with me just 1 second here, because this is very valuable information if you're new to our community. We host webinars every day. It used to just be Monday through Thursday, but now we've also added at the bottom here the Friday support session, which is a continuous 3-hour webinar on Fridays from 11 a.m. to 2 p.m. Eastern Standard Time. That'd be 8 to 11 here in Cali. So come one, come all to that. Of course, everything always kind of starts with Barry's Trading Room. It's a free trading room. You don't have to be a subscriber to sign up for it. Over 500, anywhere between 400 and 600 people in that room on a daily basis, depending on the time of the week. Barry does a really good job at moderating and teaching people about the software as he does it. Of course, it's me and Steve on Mondays. Steve takes the helm tomorrow for the trade of the week. I'm sure he'll talk a little bit about it in the first part of the webinar today. Andy rides shotgun with him. We bring in Dan and Brad, CEO, CTO, for a little change of pace there, always entertaining. And then Andy rounds things out with the 1-hour webinars on Thursdays, and I ride shotgun with him. So the week is packed full of content. All you have to do is sign up for these webinars. You'll get emails automatically generated and sent to you. All right, so we've got an interesting agenda today. Now, everybody had a front row seat of what played out in the market today. But as we all know, it's kind of about what are our expectations moving into a market session. Got some really interesting things to show you with the compare counts and how everything played out today. But first, as always, I'll probably just pass it right back over to Steve, if you're ready, Steve. And
sure.
You know, broad market commentary and see what our in-house technical guru has to say about everything. Here we go. There you go, Steve. You should have the baton.
All right, coming up. Get rid of my unicorn Pinterest here. Okay. All right. So welcome to my desktop. Typically this time of day or this part of the Monday seminar webinars, we talk a little bit about the general market, and I do have some observations. Let's start with the Qs. I'm going to go back to the Qs because they've been the most interesting, starting with the giant flush down on huge volume where a certain group of institutional people probably figured out they were overweight in technology and had the beginnings of a distribution day of getting rid of a lot of tech stocks. But the most important line on this chart to me still is this trend line, which goes intact all the way back here into last year, and touches there and touches again. But then we broke down this week, tried to reclaim it, and then broke down again, closed 1, 2, 3, 4, 5, 6, 7. Today's the 7th day we've still closed below this trend line. So what in all likeliness could happen is, the Qs may never regain this trend line. They could even theoretically pop back up into it, and just like prior resistance becomes future support on a horizontal pivot line, this trend line could also act as upside resistance at some point. We'll see. We don't know. We're right back in no man's land, right? We had the failure again. Here was Lucy pulling the football away from Charlie Brown as he ran to kick it with all the other shorts, sellers. And once again, market just reverses and bounces right back up. So is this a dead cat bounce, or just is it going to create a lower high and lower low? Is that what we're starting to look at? I don't know. But to simplify it, the only way I think the bulls can declare victory from this point right here is if the Qs get back above this trend line and close above it. Ideally, even close above the secondary line up here. So Qs have some work to do. Likewise, in the SPY, the trend line is also very similar, intact, with many touches going back many days here. And what's interesting is, a lot of the same volatility that we saw in the spiders. Those of you that are my age probably remember the board game as a kid called Chutes and Ladders, which was nothing but red slides and ladders going back up. And that's what the volatility of this market has reminded me of the last 4 weeks. But the significant levels here are prior resistance, where we broke out of this horizontal line. And as you can see, we've done a full round trip pretty much all the way back to it and bounced off it the last 2 days. But lo and behold, that trend line that the Qs broke down is also starting to come into play here and getting closer and closer. And we're having kind of a convergence here at this trend line, future trend line area, and possible support pivot level here. So this is a really important level to watch, 240, 60, 240, 50, around that level, because this trend line may start to become tested. Now, if the trend line and the spiders become tested and we get a break below that, and more importantly, a close below that, like the Qs have experienced the last 5 or 6 days, in my book over the years, that tells me it's technically guilty now until proven innocent. So with that said, those were the 2 major, the Qs and spiders. I also want to highlight something to you. Using our trade ideas data, looking at the relative volume, the Qs did 0.6. Well, that's really nothing considering on this day over here they did about 7.0, I think, or 5.0 relative volume. So ton of volume on this down day, but here we are in this little bounce back day, just creeping higher, but not a lot of volume. We only did 0.65 relative volume value today. S&P only did 34 million shares, which was 0.6 of its normal relative volume. So, we're in the throngs of summer here, and these bounces that we have are certainly doing it on lighter volume compared to the downside distribution volume that we saw on the big red candles. Taking a look over at the IWM, I thought back here it had a shot to try and break out and become the new baton taker of rotation, of sector rotation. But it fell back down way into its range, and it's still just kind of range bound as well. Nothing really going on there. The Dow, on the other hand, only did 0.55, the diamonds, excuse me, the DIA. They only did 0.55 relative volume. So very, very light relative volume. However, I will say out of all the 4 ETFs, these diamonds kind of look the most sane to me. There hasn't been that much of a pullback. Only a day or 2 of real volatility. One could even argue this is kind of a bull flag starting to to show up there. So that's what I'm seeing in the major indexes. You know, we had a couple scares last week, but those scares once again reversed, and the buy the dip crowd has been conditioned for 9 years now to just come in and continue to buy stocks, and that'll be the way it is until it's not that way anymore. Problem is, we just never really know when that day comes. I wanted to add maybe a couple of items to my segment here today before I give it back to Jamie for his webinar. You know, I was talking with a guy today who really, the light bulb went on for him because he was just spinning in circles trying to figure out what to focus his time on. So I showed him, you know, the sector ETF list. And I pretty much go through a lot of these sector ETFs, and I'm looking at the bigger picture charts here, forget the intraday, and looking for items of interest. And well, I've got 3 items of interest I want to just maybe bring your attention to. And these sectors should be maybe in the back of your mind or the top of your mind for the next 2 or 3 days. I feel like they might be trying to do something. The first one is steel. SLX broke out of a nice downward trend here, pulled back, spiked, made a higher low, and took out some highs today. I think there could be some interesting follow-through on steel. So your stocks are going to be like X. They're going to be like AKS, which, by the way, let me just stop on that. Notice this blue line in AKS here. So here's SLX breaking out nicely, but one of the smaller cap stocks in their AKS has had a real bad 5-6 day pullback, but put in a nice little spinning green wick there today. As you can see, that blue line right at the top of that wick, that's a price alert, and I've set that price alert. Because I think this could be the type of setup that swing traders can look for. It's all about the entry. The people who bought their entry up here have been doing nothing but sweating their entry for the last 5 or 6 days. But when we can find levels of support and also some confirmation here in the SLX and the general bigger picture ETF, I start to look at stocks and mark up possible levels for swing trades. And taking out a bar reversal of today's high would trigger tomorrow, and that theoretically at 611 could be a 3 or 4 day nice swing trade. So that's just a little bit of thought for the swing trade mentality and what we see there. The 2 other sectors that I'm finding of interest, one is solar. I like the way solar broke out again here from the downside, popped up, consolidated, pulled back, and dug in, and now you can see my blue line once again is if solar, which is the TAN, ETF. If it breaks above that, well, then I might start looking for some solar stocks to see if they're ready to go. So I'm trying to focus on the bigger picture and narrow down a small group of ETFs or sectors that are of interest. So far, steel, I think over the next couple of days should be kept an eye on, and TAN solars. And lastly, the best looking one of all is the old financials. And in this one, I've done the same thing. I've put a blue line. That's my price alert to let me know that it's taken out. But, excuse me, we can see kind of a bull flag showing up here. Now that bull flag is just a touch below this level back here, which looks like recent all-time highs, or I don't know if it's all-time highs. Not quite, but it's definitely a level of interest. So what could happen here is you could see some financial stocks and bank stocks, if they break above this blue line, they're going to have a running start and some momentum to possibly take out this prior level. And if they were to do that and close on that day above that orange line with some nice strong closes, that could also be your third focus this week on a sector that seems to be setting up nicely. So those are 3 sectors that I like to watch. I think AKS might be worth anybody out there that wants a swing trade idea. Mark up an alert at 611. See, the high of that is 610. So yeah, 611 would be a bar reversal and a possible 3 or 4 day swing trade on that. And then lastly, I've got one more that actually showed up here on my trend change lubricant here at the end of the day, and that's Hertz Car Rental. Now Hertz Car Rental, one of the reasons it's interesting is it's got 51% short the float. Doesn't have earnings for 20 days or so, so we're good to go there. But you can see it's moving sideways, creating a higher high. If we can build a base camp here and take out that prior high from 6 days ago, I'd like to know about it, because this is the classic example of the trend change lubricant short squeeze that could pop above that. And so being a Trade Ideas subscriber, knowing what we know, that we've got a high short float percentage, and I will be monitoring the volume 5% very closely. I'd love to see 300 or 400% there in the 5-minute volume metrics, which tells me that as we hit this level and try and go through, there's a lot of attempt and a lot of interest in the last 5 minutes. It's not an anemic attempt. There's definitely players in there. So that might be another one you guys want to mark up at 12:08. HTZ could be an interesting one. And then lastly, got a new alert I'm working on for some more higher end, registered investment advisor, professional money managers, etc. They need to play in a different landscape. Stocks that do a lot of volume, have large market caps. And Trade of the week, PayPal actually showed up on this one today. And this is nothing more than big cap stocks that are very close to going to all-time highs. But the key metric here is called this 10-day range. And what it's showing me is that there's a filter in there that says the max can be no more than 5%. So going back 10 days, the price level between the high and the low cannot exceed 5%. And these stocks all average millions of shares a day, and they're all trading at or near close to an all-time high. So kind of the same philosophy here with the trade of the week today. The orange line was the trigger, and the blue line was actually a secondary alert that I set. So what happened was we did trade to all-time highs, which was above these two wicks right here. But no harm, no foul. We got a nice gap up. We got a break out of the consolidation. And a doji is okay in my book. It's going to require patience. Let's see what happens tomorrow and the next day. I don't want to see this thing come in and fill the gap. I'd like to see this thing quietly move higher. Now, for those that are in the trade of the week, please be advised, and I'll bring this up again tomorrow, the earnings are coming up in 8 days, so it's kind of a short window to get something to move higher before earnings come out, ideally, and can lock some profits in, hopefully. So that was the thinking of the trade of the week this week, was just focusing back on the high cap stuff, not the small cap stuff. And yes, I anticipated that that strategy would like to be shared. So let me pull that back up. Where did it go? Oh, I think I closed it. Let me just grab it from my load from cloud, and then I'll share this with you guys and turn it back over. Big cap all-time high continuation, load, and I'll go ahead and save and share. So for those that don't know, I'm just going to drop this into the chat window on the GoToWebinar, and I'll just put the code in there directly. Big caps, all-time high. So that's all I got for my segment. Let me see. Yeah, all right. So I think we're caught up with questions. Anything you want to add to that before I send it back to you, Jamie?
No. That was really good stuff, Steve. And I like these, since we're technically still in what you might call the bull market, even though it seems like it's stalling out a little bit. These stocks consolidating up there at those lifetime highs, if there is going to be another push here, leading into this, for the rest of the summer, maybe into the fall, who knows when things are going to change. There's no way for us to tell. But I like this pattern that you're showing right here.
I'm going to go ahead and set an alert for it. Yeah. All-time highs. Big cap is the note I'm giving myself. And you can see I'm doing the same kind of a thing again. Well, actually, hold that thought. Yeah, so I'm using the price alert to alert me of new all-time highs. Now, everything on here, this is probably one of the nicer looking charts, and I used it in an example today in Twitter to say, this chart does not need any moving averages, Ichimoku clouds, Bollinger Bands. It's purely footprints in the sand, price action. It's about as simple and naked as you get on the charts. We try to really preach not going for over-analysis paralysis by having 10 to 12 indicators on your chart, because it'll start to get you to hold back. And the more you can just kind of look at the raw price action and know that if we break above this price here after a couple of attempts to pull back and coming back for more, the third time could be a charm to push through there, and it's a no-brainer. That's a new all-time high. There's no resistance. So we don't need a lot of indicators to tell us that. So my point is that's the best-looking one on here. There's some other ones on here that are, that's whatever. That's nothing special.
Stocks in that respective industry might be mimicking the same thing, like, for example, ALO, Allstate.
Right, exactly.
Very similar, but a little bit different.
CTSH might be interesting. I like the sideways action here. You could make a case to put up a markup, but here's my final point, okay? You've heard us use the word machine plus man, man plus machine. You've heard us use the word the Holy Trinity. These top lists require, a little extra work. What we're trying to do is simplify things and give ourselves a short list of stocks to look at. And if we see something interesting, that's step number one, using the technology in the scan and the filters. Step number two is to identify a possible chart scenario that looks good to you. And then step number three is to just step in and use your handy dandy price alerts and set them up. And that's just one of the ways to try and simplify, what's going on. But my point is, just because something pops up on here doesn't mean buy it. It means look at it, put it through your prism. Is the market strong today? Is it weak? Like Jamie said, is the particular insurance industry strong, or is it weak? So there's other pieces of the puzzle that have to come in here. So there is a discretionary element. And I just wanted to remind that people that's what we mean when we say man plus machine.
The old time.
Yes, I can share that, Walter. I can share this the sector ETFs. That one's probably better left. Send that request to info@trade-ideas.com because I'll have to include a list of ETFs as well. Because on the sector watch list, if you'll notice it, when it comes to you and you right-click configure, you're going to basically have to go to symbol list and enable the ETF list. So that's a list that has to be created by yourself. In the tool section, symbol list, create new list, title it ETF, and then once you've got that window, I can drop in the symbols in an email to you and then give you the settings. That's a much better way, more preferred to do that. So I will be happy to share both those with you. Good. That resonates. All right, Jamie, I know you got a lot to talk about, so let's send it back to you.
Got it. Just let me know when you got eyes back on my desktop.
I see it.
All right, so good stuff, Steve. Very good stuff. And once again, the beauty about that pattern is the simplicity of it. Don't need all these lines and Ikimochu scratchy clouds and RSIs and Fibonacci's and all that stuff. It's just nice and clean. Now you can have all those things, just complicate your life a little bit. But we'll get into some more charts as well here. So what we're going to do first, ladies and gents, is talk about Holly and how she did. I'm going to kind of jump around here. We're going to talk about the compare count readings in the first 20 minutes of the market to always temper our expectations. So this will be familiar for some of you guys and ladies and gentlemen who attend on a regular basis. For those of you who are new, it could be quite eye-opening. It certainly was today on how things played out. So let's just do this. Holly showed up to the party today with 11 strategies in her hopper. All of them were long except for one short strategy, and she called out a total of 19 trades today. All of those were long with the exception of one trade. So let's just get in there and take a quick look at what was going on. But before we segue into Holly, I'm going to go ahead and jump the gun here a little bit, and we're going to look at these compare count readings. Now, what I've done here is I've basically got the same strategy in these windows, but I've just chopped them up into different market caps, very similar to what you will see when we talk about this window here. All right, I've got 3 different versions of the same strategy, but we've got 4 billion and higher for market cap, between 2 and 4 billion, and then any company that has a market cap of less than 2 billion. And of course, you can chop these things up whichever way you see fit. This is just the way that I do it. So these are the readings in my compare count windows after the first 20 minutes of the open. So right at 9:50 Eastern time is when I took these screenshots of what the readings were in these windows. And we can see here on the stocks with market cap over 4 billion, we were getting on accelerated volume in the first 20 minutes, 54% buying bias. Now just remember, keep in mind, these are only stocks where the 1-minute volume was extremely high as these alerts were firing. So 54% here. If we go ahead and take it above 5.4 billion, 53%, so a deviation of 1%. Nothing to jump up and down about. So we could just extrapolate that anything in the higher market caps today there was a slight bias because this isn't a guarantee of what's going to happen in the future, but it gives us realistic expectations. So typically the rule of thumb is when you see these readings below 55% on the bias, which in this case was to the upside, below 55%, what that tells me that, well, there will be opportunity here today in the upside, but it might not be sustained opportunity. In other words, when they're passing that cookie plate around, you better not pass. You better go ahead and take a few because the next time it comes around, it's probably going to have a bunch of crumbs on it. So any day where we see above 55 and encroaching on 60, that's when we have a pretty good idea that not only will there be good upside potential, but there could very well be a lot more of it, and there could be sustained buying. So we were right on the threshold today, and it was very interesting to see the way that things played out. So hopefully I'll be able to clarify that with a little bit more information here. So we're going to come back around to that. Now let's talk about how Miss Holly did today. And boy, we went from one extreme to the other and then back again. So here we are looking at risk off chart, the risk off factor, and we were just kind of flatlining all day on the open, and then we'd get up into profitability but not stay there for very long. And then when we come over here, risk on. All right, risk on tells a little bit different of a story. We can see in the first part of the market here, you know, whether we're looking at risk off, nice and spiky, risk on, a little bit more manageable here. But as we see, a struggle. What is that telling us when we see the AI struggling? That's saying basically statistical probability is being played, but really there's a lot of noise in the market right now. So I always like to use this chart right here as we can just pretend like it's a stock chart. So in this first little trench here, before we pop back above highs, the statistical probability is not having very good success. Then we catch, if we were able to draw a line across there, just like we were marking up a stock chart, we see, boom, all of a sudden, the statistical void is not there anymore, things are making sense, and things are working. And then, of course, all the way up here, and then all the way back down again. Now, remember what I said from those compare count readings. Upside potential will be there, but it might not be sustained. That's exactly what we saw the Holly chart do there. And of course, when I saw those readings in real time and we were down in this little area right here, I'm thinking to myself, well, even Holly can't see the alpha today because there's just not a big enough bias. Well, clearly, in that assumption, I was mistaken. But of course, the fact that it was not sustained lends credibility to this theory that I'm preaching to you guys. So, Holly was very active today, and we can see out of all the strategies, not one strategy just, you know, ran away with everything. We had 3 from these guys. Of course, they just happen to be, look, there's something going on with 3s today. 3 trades, 3 trades, 3 trades, and 33.3% success rate on all of these strategies, which basically means they only hit 1 of 3. But that, you know, don't really see those 3s show up like that very often. This little guy hit 2 for 2, 1 for 2, and then 1 for 1, respectively. One loser here. So let's get into the nitty-gritty here and take a look at Holly's trade blotter. A couple different things I'd like to point out today. First, we're going to do what we normally do and basically look at all the things with risk on sort, look at risk off sort, and then see what kind of spreads we had in here. So I'm going to move max profit out of the way just to not confuse anybody. So we've got risk off here, risk on here. Always like to point out there's always a spread between here. We're never going to pick, you know, every once in a while, yeah, we'll sell something at the top. Happens from time to time, but it's not the norm. So really the goal here is to try to get something between risk off and risk on. We can see there's quite a healthy spread between here, a little bit of spread here, some spread here, here. But this B-zone, I mean, I have to say, if you're going to pick a trade of the day, a lot of interesting things going on right here. Now, you're like, well, Jamie, it's trade of the day, and Holly's showing risk off profit of negative 12 cents. I mean, how's that the trade of the day, right? Well, interestingly enough, statistical probability, we all know it's not the magic bullet. It can really be a useful tool in our arsenal, but it's by no means the holy grail. That doesn't exist. You can play with perfect statistical probability. That does not guarantee you're going to come out on top, but it greatly increases your odds over the long term. So why did Holly lose 12 cents in this trade right here? Well, reduce risk. Holly got into the trade. It wasn't moving quickly enough for her. She has the right to get out early. We can see that the smart stop, which was in play here, was 30 cents. We can see the entry price here. We can see the smart stop down here. Now, if Holly had not have executed her right to get out early and take a 12-cent loser, then sure enough, boom, on that little wick right there, she would have gotten stopped out for the full 30 cents. So she did end up saving us a little bit of money here. But what do we do with this trade after Holly gets stopped out? Whether we were in it or just monitoring it here? Because number one, anybody that comes on the regular basis is familiar with this little pattern, especially on a Holly trade. Once again, statistical probability is good for the day. Sometimes the timing is off just a little bit. So we're in the trade here and then whack. Holly gets stopped out, we get stopped out, whatever. Now, just because that little move happened doesn't mean that this thing is one for the dustbins, because when you get into the habit here of identifying these little range breaks, which that top had been put in right in the entry bar that Holly called the signal, and then we get this unfortunate little stop out wick here, and then right back into this range. So how difficult is it to go, okay, number one, this trade does have statistical probability. It's not like it went down here and busted new lows. It took a little wick. What do we have? About 109,000 shares in that 5-minute period, right? Which all these guys had 36, 14. So that was a lot of shares in there. Probably is what caused that little wick action. But if we played the range break, which is right here, as that plane is being broken, then we had lots of opportunity on the upside. Now, how would you have known about this? Well, because if you've been watching, and where did my window go? Bear with me one second here. Okay. Because this little window right here told me about BZUN as it was cracking that little plane there. Now what I've done here, and of course BZUN, if we look at the market cap on it, 3.6 billion, which falls between 2 and 4 billion. So it was this little guy that produced it. So what I've done is I popped that guy out into his own window so it's easier to take a look at here. All right. So here we are. Today is the 10th. Here is 7:55 Pacific Standard Time, and that is right here. This is the 750 bar, which encompasses 750 through 755. So I saw BZUN after Holly had gotten stopped out. Boom, new high, doing it 3.5 times a normal 1-minute volume, and we can see each new tick, that volume is being sustained here, and then we've got a nice clean continuation after this first little wick out period. But once again, if you're in the habit of doing this, it's second nature. All right, Holly gets stopped out. Let's see if it goes and tempts that level again with volume. So you could have skinned this cat a bunch of different ways. You could have been watching the turbo brakes family with no resistance. By the way, when we're looking at BZUN on the long term, it's out of its box. It's hitting lifetime highs. Reverse horseshoe, boom, up through that level, and it's still going. So that also is another feather in our cap, because once we see Holly here, whether we participated, got stopped out, or just watched, it's still very high quality information. We miss things, timing's off just a little bit, but if we get in the habit of doing this, As soon as we see Holly get stopped out, we come and set our price alert here. Let's notate it as well. Holly, second try. So we can rely on our price alert window. But then again, we've got other high qualities in our arsenal which are telling us about these things as they unfold. So once again, it's still got some great characteristics behind it. Once it comes up here and breaks, that's an identifiable chart pattern. That's 1 star. We know that it came through Holly, and we know that statistical probability is good for the day. That's 2 stars. The fact that it's doing this with exceptional volume, well, we'll call that 3 stars. So, obviously a trade can work on just one of those parameters alone, but when you can start stacking them, 1, 2, and 3, that gives us a lot more confidence. And we can see here that if you were prepared in that capacity, there were not only this entry point, but the pattern repeats itself here, 2, 3, and even 4 before it kind of flattens out up here towards the top. So that was the B's on today, and Holly produced it, had a lot of really interesting characteristics about it. So I hope that's clear to everybody, because once again, it's the simplicity in the patterns that we're identifying. They can occur on both time frames that we're seeing here, or any time frame for that matter. So once again, it's just a way to really simplify things, not confuse ourselves with all these different studies, charts, things of that nature. All right. Yeah. Well, Joan, why aren't more people doing this in the world? You tell me, and then we'll both know. One thing that, humans as a whole, me, you, everybody in the world, one thing that we like to do is we're pretty good at complicating things, right? Whether it's trading or any other aspects of life, you name it. We're really good at complicating things. So, for me, Steve, Andy, Dan, not only do we like to take information that's been there forever and rearrange it into different capacities that actually mean something, but, there is a huge thing to be said for simplicity. It makes a lot of sense. Everybody that has training sessions from me knows that I like to really take it to the simplest level. It's the same reason that they taught us to find common denominators when we were young kids learning math, because it makes things easier, simpler. So, why not apply the same mentality to what we do here? Right, and don't worry, Jorge, I will drop this in just a minute, but before I do that, so as not to lose my train of thought, let's just go ahead and cover a couple of more Holly examples. Now, I want to talk about this column right here, because you might be looking at the Holly performance today and go, well, I see she finished red in both things. How can that be good? Well, it's what happened during the show, right, that we want to focus on. So I just found it really interesting and amazing that even on a day like today where there was upside volume, but not really a whole lot of follow-through, and a lot of things that were up today, if you didn't take the money, before you know it, they were heading back through your entry point, and if you didn't manage your risk properly, you let a winner turn into a loser. Hopefully not. But focus your attentions right here. Max profit. This is looking at the risk off only, the more conservative of the two modes. And look at all of these values. This is what the position was up the most in risk off mode today. Now, some of you might be new traders. Some of you might have been around the block, been doing this for a long time. But think of this. When you make a trade, how often are you in the money immediately or period, right? And I'm not just talking about, a penny and then it rolls over, which we could assume that that's the way these guys down here were. Flat, 0, 1, 3 cents, 3 cents, 6 cents, 7 cents. But this is very eye-opening, because on all of these trades, and of course we all take a little bit of slippage, so maybe add or subtract a penny to some of these, because sometimes you get better prices, sometimes you get worse prices. Most of the time you get a penny worse, but you do get better prices sometimes in Holly because stock will take a quick pullback and you can get a better price. Now, whether that's to the tune of a penny or a nickel, it all just depends on the stock. But the amazing thing here is that all of these trades, you were never in dire straits to begin with. You were always in the money or flat, depending on the stock and the spread. That's half the battle right there, ladies and gentlemen. Half the battle is just getting green on a trade. Second part of the equation is not letting that green escape you, right? So when you're thinking of Holly and trying to kind of find your bearings on how to interact with her, these are some very important factors to consider. Being in the money is half the battle. So just the fact that all of these stocks were in the money at some point, the worst one was a flat, that is huge. That is very powerful. And it is this statistical model that's yielding these types of results. So once again, what is Holly? She is a high quality information source, unlike any other type of product out there, because she's using the statistical model that we've created. Okay. Now this guy right here, reduced risk, 5-cent loser. So if we look at Holly's entry right here, once again, this seems to be a common thread today. Reduce risk, things aren't working, Holly takes a 5-cent loser. What happens? Look, all the way back down, just like the B-zone trade. Now, this is also a factor of what Steve was showing us earlier. Look at these volume levels and how they finished. So to circle back around here, when we see the compare count readings that I was showing earlier, and we know there's going to be upside, but it's going to be a little flaky today, and then we're starting to see these types of things happen a lot, it all jives. It all falls into the same vein. They're all characteristics of the low volume day. So when we're looking here, Holly takes that 5-cent loser. If she would have stayed in it, would have given away 25 cents. We come down here for the stop out, whether we get the alert from a range break or whether we set our price alert manually like so we don't miss it on that second entry. Look, this is yet another second entry that would have worked for Holly today. So as you move forward, if you start going through this process, the next time a day like this starts to unfold and you look at your compare count windows and you see after the first 20 minutes below 55%, this should all come back. Not immediately, but on those days where you see Holly making entries and you're like, well, I remember in that webinar what Jamie was saying about anytime I get readings under 55%, no need to just clamor in there. Let's see what it does. And we're going to see characteristics like this when the volume is low. Just makes a whole lot of sense. All right, so just checking out the questions here. I'll drop that window for the turbo brakes family in there. Now, Nathan, on your Holly questions, of course, there's specifics that you might need to include there, like are you taking every trade, things of that nature. I don't really know what to tell you at this point in time. Frank, okay, your question got answered. Awesome. Just trying to catch up on this question here. Yeah, that is a different window, David. That's a different window. It's looking for stocks that aren't quite at the all-time high. It's more of a, it's a what I like to call a predictive window, right? Let me just pull that window up here because I've got it, and it would be a good time to kind of illustrate the differences here. So give me 1 second. I'll get that window up here. All right, Steve.
Yes.
Here we are looking at your new guy. So why do I call this a predictive window? Well, because we're predicting. This one's already out of its box, but if we're finding things that aren't quite out of their box, just pick this one at random. What are we doing? We're playing the range break game, except we're doing it on the daily as opposed to the intraday for a nice intraday signal. So, prediction is that it will come up here and pop that level, in which case we get our price alert. So we're predicting. Now, when we're talking about this guy, this is the turbo up family, which in these strategies, and by the way, let me show you the setting that Steve is using. In the lifetime high, he's using a position of 95%, but then he's also using the 10-day. Is this the one with the 10-day in there, Steve?
Yes, it should
be. But it can't be too high on the 5, which is going to pretty much assure that it's a little bit, that it's not past 100, pretty much. Now this one right here, we're looking for the alerts with the high volume, where the position in the lifetime range must be a minimum of 100. So they're already out of their box, and we're reacting to see if we can catch them at the right time on the intraday, because they're already out of their box. Now we're reacting. If we were able to catch, say, Dow right here, because we did see it come through here at this point in time. Now this one I don't think came through here, but I'm just using this nice little pattern here as an example. So let's say, boom, it did come through, turbo breaks up. It's because it's already out of this area right here. So once I see this pattern play it on the intraday coming through here, then I know that anything coming through here is already going to be out of its box on the daily. So no resistance here, no big guarantee, but it's another feather in my cap as to, this stock working and not running into any resistance. So, this isn't the greatest example, but, if we see this range break happening here and we played it, it didn't hold up, but we can see that it's out of its box here. Now, one that did work extremely well today, this was not a Holly trade. This was straight off of the turbo breaks family up again, and I pulled that one out of its window as well, which was this FIZZ today. Now the first occurrence out of Fizz today, right here, as it broke that plane, it didn't do it here and here because the volume wasn't there. But see, obviously, as this was unfolding, which, by the way, when this signal came out, this bar was not anywhere near that big. But I had it right from the horse's mouth. Fizz is hitting a new high, and guess what? It's doing 7 times normal 1-minute volume. And as it continued to go up in this bar, topped out at 12 times normal 1-minute volume. So once again, that's a star that we add. Range break, star 1. Range break with big volume, star number 2. And then we can see a nice push to the upside. What does it do? It sets up again. Range bound. Another push on big volume, and I know because I was sitting here all day watching this thing, and then yet another opportunity here. So it's the classic example. If you can identify the buyer early on, a lot of the times there's room for a second, maybe even a third, and sometimes even a fourth entry on these nice little consolidation breaks with volume as the buyer continues to get as much as he can before upping his price and, affecting price impact on that stock. So once again, the name of the game, ladies and gentlemen, is if you're playing this nice little pattern here, it's just timing, waiting for things to come to you. And once again, what differentiates this pattern, because these are a dime a dozen, they're all over the place. Now, the same pattern with little to no volume, probably going to fold over and go right back down into its range. It's when you have that volume acting as the fuel for the nice setup, that's when that potential energy really has a chance to turn kinetic for you in the form of northern price movement. Right, Richard. Webinars are being recorded, and it'll be posted probably a couple hours after
Just a real answer, quick question, answer to Frank's question. It's a tough one, and it's a tough one, Frank, because there's a word then in your question. Is there a good scan you guys have for stocks that break through resistance, then retrace back for a bounce off? You know, it's very hard to do if-thens and things like that. I mean, there's certainly ways we can find stocks that are breaking out, but you know, we may have to put our heads together. If you want to come by on Friday on the 3-hour technical support Friday, maybe we can figure out a way when we have more time to try and figure out a way to catch those stocks that first did break out of resistance, but help you locate a way to try and see if there's a way to maybe use price alerts or some sort of symbol list in a second scan to kind of build on top of that. But again, the reason I wanted to vocally answer that question is, you know, when you put the word then, T-H-E-N, in the middle of a sentence of what your desire is, it makes it kind of tough where we got too many layers of things happening that way.
Right. So Steve, what I did is I just took your window and I removed that 10-day range qualification just to get some more symbols up here so we could talk about that. So like here's CSX. All right, this is the daily. You know, it's right up here at all-time highs for the life of the stock. Now, it's busting out. Who knows how far it might go the next time it takes an excursion, and then it might come back down here, right? So that would be the thing that Frank's looking for, but I guess a good thing to, I guess, you know,
where do you go from there?
How much change in a one-day period might be good? Because things that are above 100% of their lifetime high and then they turn in a big down day, those might be things to take a look at, right? They might have come back down to that resistance or they might have busted their downside resistance. So I think that'd probably be a good end of the day scan to target stocks that really had big moves, either on the whole day or in the last hour or two, and then start looking at those stocks. Of course, that's just what that's just what came off the top of my head. Right off the bat, there's always probably 24 ways to ask the same question when you start, you know, thoroughly analyzing it.
Exactly.
All right, so before I forget this, let me just go ahead and pop this window into the chat here before I...
And again, there's a couple of comments. People are loving our Friday sessions, and so if you're not on the list of webinars, which I don't know why you wouldn't be, if you're attending this one, you're obviously on the list of webinars. Sometimes, depending on your email subscriber, ISP, you may need to go to your promotions or spam links to catch the Thursday evening and Friday morning email that alerts you guys that the Friday support tech session is going to be up and running. So we've done it 6 weeks now, just nothing but great feedback every week, and you know that gives us a little bit more time sometimes to try and work through some custom ideas. So hope to see you all then as well.
Right. You know, the last question that came in, turbo down family for downtrends, I guess, was that the comment? Well, we've got this version. I've got a downside version. I'm just really not actively promoting it right now because we're still
not productive
in the market, and you know, for a lot of the people in this webinar, you might not be going short. Now, if there are any people that really, you know, if shorting is your forte, by all means, hey, I'll drop this one in there, and this one produced M and several other, you know, stocks that really got crushed today. I mean, lots of good entry opportunities on this M today. And by the way, this is the first fairly liquid stock that I'm seeing where when we look here, it looks like the opposite of what we were just looking at, all right? You don't see many stocks hitting all, you know, lifetime lows right now, but look what M did, you know? It's been trying for weeks, but today it really took the plunge. So, you know, retail in general, probably be a pretty good sector to keep an eye on for downside action. But as I said, this little guy was full of the same pattern that I was showing to the upside today, but to the downside. Lots of good things coming through here using that same technique, but flipping the pattern upside down. So I'll gladly drop this one into the chat in case anybody wants a good downside with momentum volume ticker. And there we go. So Steve, anything to add before we bring Scott in?
No, but I think you were definitely correct in kind of holding back that downside turbo brakes as a favor, because that's not what the market is. It's not what's working, let's say, typically right now in the market. There will become a time where that might become a lot more useful downside indicator. So I fully agree with your explanation on that.
Yeah, and hey, I love to short things. I mean, it's simply because of the fact that, well, stocks like to go down in the elevator. You know, when you do get that good short, it's very, immediate gratification, if that's the right term. We always like to be, we always like to see that that green number get big as quickly as possible. But hey, when the market finally does turn, it's going to be business as usual to the downside with these same techniques. Alrighty, Senor Scott, if you're waiting in the wings, I think people are ready to hear how they can save some money.
Yeah, thank you. Let's just mention a few things. You know, we have a podcast that we've now had going for, since mid-December about, and it's growing strong. We have interesting sessions on Fridays. So do find the Trade Ideas Podcast by searching for the name, Trade Ideas Podcast, in the app that you use to listen to them. It could be iTunes, it could be Stitcher. And then subscribe and you get the new ones. And you can also go back and download any of the archived versions. Go do it today and then listen to Fridays or the previous weeks also. And stay tuned for the new one that comes out this next Friday. We also have a version of, before that, let's just reiterate that we do have a test drive starting next Monday. So go to trade-ideas.com/test drive and sign up for that. It's going to be good. If you know that, if you're not a subscriber, or if you're a standard subscriber and you have not tried premium, this is your chance to do that with real-time data. Lots of support. We're doing special events that week in regards to training and onboarding, so take advantage of it. We do these only a couple of times a year, and it is our answer to a trial version. So this is, you want to try Trade Ideas Premium, this is your chance to try it. So sign up, don't miss it, trade-ideas.com/test drive. If you're an IB customer, you're going to want to look into using interactive brokerage with Trade Ideas and connecting them. It's a module called Brokerage Plus. It's integrated into the beta version, the current beta version of Trade Ideas. So if you need help with that and you're using interactive brokerage, just email info@trade-ideas.com. Talk to support for some help setting it up. We have some help videos on it. We've got at least one YouTube video on getting that set up, but we'll help you out with that, and we're looking for more beta testers that are using interactive brokerage to try it out. You can automate your trades. If you want to come on board today, just use the product code Sunny, and that'll give, you need to use all caps because it's case sensitive, but that saves you an instant 15% off your first month or year of Trade Ideas Premium or Standard. So if you know you're not, you don't need the test drive to feel like you're ready to sign up, just go ahead and start. Look forward to seeing you there. So tradeIdeas.com/price, use code Sunny. Remember that every subscription, including the $99 a month base level, includes a full hour of one-on-one training. So after you become a subscriber, just go and sign up for the training after you have attended some trading room sessions and watched a few webinars. When you have the questions that you know that you need answered, secure your trading session reservation and get Jamie or Steve or Andy to give you a one-on-one session to get you started. Email any questions to info@trade-ideas.com. You can reach out to Steve or Jamie directly using the emails on your screen. You can also download a PDF that's got a lot of this information from the slides on it. Just go ahead and expand the handout section and click on the blue link to download. Follow us on Twitter or Facebook. You can find those links there. Thank you, guys. We'll have the recording up tomorrow, tonight, and you'll get an email reminder tomorrow about where to find it. So tomorrow we have the Trade of the Week, and we'll see some of you. A bunch of you should already be on that list, and you get an invitation within the next hour or so. And that's it for today. Have a good one.
All right.
All right. Thank you very
Thanks.
much, Scott. Steve, as always, thank you for your input. And everybody come back, and Steve will be hosting the Trade of the Week tomorrow.
Yep.
All right. See you then.
Steve and Andy.
Bye.